What's going on? It's Parker. Today, I'm going to be showing you why you should be a little more careful with fair value gaps. So this video might be a little controversial because fair value gaps are super popular. They're widely traded, especially among YouTube. Like YouTube loves fair value gaps, ICT loves fair value gaps. And I'm not saying don't trade them, but I'm going to show you how you can, if you decide to still use them after this video, how you can use them a little more efficiently. Okay, so let's go ahead and get straight into it. I'll start off briefly explaining what a fair value gap is, real brief, because most people kind of know, and they're pretty simple, marking them up wise. So if we go to mark one up, we actually have an example of a bearish and a bullish fair value gap. So you have a bearish gap right here. Typically a gap is made with 3 candlesticks, with the middle arguably being the most important, because typically what is happening is you have a candlestick here, the wicks from this one, the bottom wick of the first candle, top wick of the third candle, leaves this gap, which the gap is made by the body of this middle candle, okay? And that would be a gap. And now this is on the 1 minute time frame. Obviously you can, many people write these up on several different time frames. This is just an example, real simple example. And for a bullish gap, this isn't the cleanest example. Typically you preferably want 3 bullish candles or 3 bearish, but you have a gap here too, because first candle top wick, third candle bottom wick, and that's a gap. All right, that's how most people draw them. You have them in several different instances. You can draw them different ways. They're everywhere though. And I think the problem with fair value gaps is the way they're marked. So people trade them as, they refer to fair value gaps as an imbalance within the market. You know, they say, oh, we have this gap here, we have orders left to be filled, so we're going to retest. And typically when people take a fair value gap, they tend to go with, you know, how it was marked. So if this was a bearish fair value gap, typically they want to continue to take this bearish. Some people, they'll take the inverse of it, so they see it's bearish, broke through, they'll wait for a retest, take it long. All right, but the main principle behind a gap is it's an imbalance. A lot of people say, okay, there was a gap, price moved rapidly and efficiently, so that means there's an imbalance here. We have to come back and fill these orders, and then we'll continue to go down or we'll continue to go up. So in this case, we should continue to go down because sellers sold aggressively. Odds are there's probably still sellers here, and we'll sell off again. Okay, and same with going long. You know, if I move this box here, all right, we got a gap here. Okay, we moved up efficiently. We're gonna come back down into this gap. Buyers should still be here. We'll push it up, and some people, like I said, take the inverse. The problem with this though is with the way you mark fair value gaps, they really, okay, so this is gonna be tough news, because this is tough news. So this might upset some people, but in my eyes, the way a fair value gap is marked, it literally means nothing. Like just drawing this little rectangle on your chart does not signify anything. It signifies nothing. Whether you mark it on the 1, the 5, the 15, it does not signify an imbalance. It does not say we need to come back in this area and fill this area. There's people on YouTube that say every single gap must be filled, or most gaps must be filled, and I think that's false. The market does not have to do that. The absolute, what absolute is there within the market to say this gap must be filled? There's not very many absolutes within the market, and I would say fair value gaps being filled or needing to be filled, that is not one. And the way they are marked up 90% of the time is meaningless, completely meaningless. However, there is a way you can give your gaps more meaning and add some confluence if you're still going to use them. Personally, me, I don't use gaps at all anymore. I used to use them religiously, and after collecting data, it didn't fit my style of trading. I just couldn't make it work. However, I'm going to show you right now one thing you can do to increase your win rate with gaps, or even negate using them and use another term, another gap within the market. And these are the gaps I use, so I'll go ahead and show you. So if you watched my previous video, you probably already know what I'm referring to, but the gaps I'm talking about are going to be low volume nodes or gaps within the volume profile. And I'll go ahead and show you. So I actually have some examples. I'll go ahead and show you now of what I mean. So if you look here on the right, we have a visible range volume profile. So what this is showing is you see volume by time down here. Okay, so I'm seeing volume per candlestick, 1 minute, 1 minute, 1 minute. That's the volume. This is showing me volume by the price level. So you can see here, this is the volume at each specific price. Just real simple. I use a visible range. I also use a fixed range, which is what this indicator is here. You just type in fixed. I already have it favorited. Click this, and then it'll show you the volume within that specific range. So the gaps I'm referring to are going to be these areas, these low volume nodes within the profile, and I have them on both ends. This is just showing me a different time frame, a specific time frame. This is showing me whatever's visible on my chart, okay? And as you can see, they obviously align, which makes sense. Now, one way, very simply, that you can make a gap, a true gap, one simple way that you can confirm your gaps within the market being a imbalance, because not all gaps are imbalances. Some are, some aren't. That's why some work, some don't. And really, I mean, sometimes your strategy will work and sometimes it won't. There's nothing that is 100% guaranteed. Anyway, one thing you can do to improve your gaps and confirm they're in imbalance is using the volume profile. So for instance, I ended up taking a trade off of a gap. This larger gap here is from a higher time frame. There is a smaller gap. If you guys don't see, it's going to be right here. All right, now I don't use these at all. I pay zero attention to gaps. It wouldn't matter if it was a gap there or not, but it happens to line up with the fair value gap. So what I was looking at is the gap here on the volume profile. All right, so I'll go ahead and delete this so we got some space. So basically what I saw is we're breaking structure clearly to the downside, which makes it easy. I'll be honest, it makes it a lot easier to read. And then the other thing I notice is we're respecting these low volume nodes, all right? And this is, I'll be honest, this is way easier to do in hindsight. It's a lot harder to do live. Because in hindsight, if you look on the right, you can see these gaps, all right? When it's happening live, you don't really know exactly what the volume profile is gonna look like. So take that with a grain of salt. But if you look here, we respect this low volume node, okay? There's no gap here either. And this play would have worked out well. All right, and I missed that opportunity. That's fine, okay? I get another opportunity. We come down, we happen to make a gap right here. There's a fair value gap, this small rectangle. We get real close to pushing into it, but guess what? I'm not watching the gap. I'm watching the low volume nodes, the other gaps within the market that have true meaning, because this is representing an imbalance. It's representing illiquidity, a lack of participants, a lack of volume. So when we push into this area, and I'm not going to trade every single one. You know, most people don't trade every single gap, but it's an area of interest for me to watch and see what participants are going to do. So with a low volume node, a gap on the volume profile, I'm going to watch. I'm going to look and see how participants are doing, see if sellers are stepping in, see if buyers are dying off. And I'm not going to lie, I use the book map almost exclusively for my entries off a low volume node. And this is just one example. I'll go ahead and let me show you another example I have. So here's another example of a trade I took with my strategy. And I think it did happen to line up with a gap again. And once again, I pay no mind to these gaps. I just pay mind to the gaps within the volume profile. So let's go ahead and look. So it looks like I actually took this short and caught about 10 points. I could have caught a little bit more and went down about 11 more points. Whoop-de-doo. But as you can see here, and this is not as prominent as a gap within the market, so I tend to get out of these trades a lot quicker when the gaps are this small versus these larger imbalances, as you can see here, that tend to hold a little better. Anyway, we happen to have a gap right here with this rectangle, and we break through it at first. We break through this, come back in, retest, and that's actually where I get short, and I end up taking my profit off down here. And now I'm not paying attention to gaps whatsoever. Not anymore. I used to all the time, but now I pay attention to the true gaps within the market, which are the volume profile gaps, the low volume nodes. So basically, the train of thought with a fair value gap is that it's an imbalance and it needs to be filled. But the way you can confirm that is with the volume profile. I highly recommend, if you still want to continue to trade gaps, that's fine. I would do some back testing and some forward testing with a volume profile indicator and just kind of see how that helps your strategy. That way you can determine what gaps you want to take and what gaps you want to leave alone. I think you'll honestly be pretty surprised using the volume profile how helpful it can be in identifying areas of interest where you want to trade, especially if you do trade gaps. I'm not trying to obliterate gaps, all right? But honestly, if you're going to continue to use them I would strongly urge you to use the volume profile. I really do think with enough data collecting, enough experience trading it, you'll notice a pretty big difference. It helps a ton, and it confirms what you're already looking for in a gap. You're looking for an imbalance, right? We'll confirm that with the volume profile, and I think you'll be doing a lot better. I hope you guys learned something from this video. I'm sorry it took so long. A lot was happening. I got sick. I recorded a video. The audio was jacked up. Hopefully this one's good. I'll be making more frequently, and let me know if you guys have questions or any comments, and I'll get to them all. So thank you again.